Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the Forex Peace Army.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit Forex Peace Army.com forum and read my analysis for the week before watching this daily video. Good morning, welcome to the EURUSD daily update, and today we will start from the daily chart of EURUSD. Currently the daily chart contains a lot of interesting and amazing information that can lead to the very interesting price action during the next week. But my explanation of the daily chart will be based on my weekly analysis because the development on the daily chart is just a realization of the potential weekly momentum trade to the upside. So to better understand the context of this possible trade, I suggest that you should visit forexpeacearmy.com to read my text version of my weekly analysis with the charts and detailed explanation of the larger picture of the current situation on the EURUSD. So I just want to tell you that the target of this possible momentum trade on the weekly trade, the minimum target, is about 130.50 area roughly. So the daily picture is just an explanation of the possible development of this momentum trade on the next week. So a lot of stuff on this daily chart. Let's go through it step by step. First of all, I want to remind you that this area is a very strong area of support. This includes daily Fibonacci support around 126.05. Also, this is the 1618 target of Gartley's butterfly intraday pattern that we traded during the previous week. So as you see, this area of support has held the market. The market starts some retracement to the upside. Now, the area, this is no more the Fibonacci resistance because market first of all deeply pierced it during the previous week, and besides it has closed above it. So this is no more the Fibonacci resistance area. The next Fibonacci resistance area is 127.94, 128.16. This is the confluence resistance area that is more stronger resistance than just a single Fibonacci resistance. This is the 618 resistance from this high to this low. This is 382 resistance from this high to this low. Besides, this is red dash line is the weekly pivot resistance 1. Also, this gold dash line is the monthly pivot point. As you see, this combination of 127.86 to 128.16 is a very strong resistance area. And I suggest that there are a lot of buy stops that are situated just above this area. This is a very important moment. I recommend you to keep in mind that this is really strong resistance, and I suppose that there are a lot of orders that has been placed just above it. So the next resistance is 128.72 and 128.92. This is the weekly pivot resistance 2, very deep resistance, and 382 resistance from this high to this low, from whole swing down. Okay, what are my expectations about the price actions during the next week? Based on my weekly analysis, I expect that market can show us very strong move to the upside. First of all, look at this. This is possible reverse head and shoulders pattern, and the probability of this formation that can be appeared on the market is solid, because as you can see, the head is precisely 1618 expansion from the left shoulder, and this is the very typical for the head and shoulders pattern, that the head is 1618. Also, as I said, there are a lot of buy stops just above this area, and when the market will start to break this area to the upside, this will be just like an explosive, because these stop orders will add fuel to this upper move. So we can see some strong long bar to the upside. and the possible end of this bar will be this area of resistance, weekly pivot resistance 2 and this Fibonacci resistance area. After that, market should show some retracement. Because of these areas will be absolutely disrespected during the fast move to the upside, very often returns during the retracement to the unrespected levels, and by this returning, the left shoulder of this possible reverse pattern will be completed. Our trading plan for the week is to enter the market. If you are a positional trader and you are trading on the daily time frames, you will be able to enter the market during this retracement to this area of resistance that will be the support. So that's the trading plan for the week if we will see the breakout to the upside. The target of this move, the minimum target, is 130.50 area roughly. On the hourly chart we will discuss the possible more sophisticated way to enter the market that will be safer and let us possess ourselves to this possible breakout. From the other side, the hourly entering the market will save us from the possible breakout failure, or if market in general will intend to break this area at all. So let's shift to the hourly chart. This is the hourly chart of EURUSD. This is our daily Fibonacci conference resistance with the monthly pivot point. This is the weekly pivot point 126.99 and weekly pivot support 126.90. So why this the way to enter the market is safer than on the daily chart? Okay, explain you. First of all, look at this area. It includes weekly pivot point and hourly confluence support. We can enter the market on the long side if market will show us some A, B, C tap, gradual and harmonic retracement to this area. Wait when the market will flirting with this area. If market will flirting, maybe pierced above this area, below this area, then returns back and shows some signs of thrust right here, we can enter on the long side because market will be above the weekly pivot point. If market will show some strong down move like a falling stone right here, this leg will be very strong to the downside, don't be long. If market will close on Monday below the weekly pivot point, also don't be long the market. The main beacon to enter the long on the next week, and that will be suggest that the bulls are still in charge and the market will intend to move higher than this area, will be the fact that market will hold above the weekly pivot point. If this will happen, then we can enter on the long side. If not, don't be long. You can make some scalp trade or something other trades that you usually make on the market, but don't be long on the position of trade. So why this way to enter the market is safer? No, first of all, this will enable us to possess two possible breakout to the upside because we enter the market before it. Then when the market will start move upper, we can move our stop losses orders to the break-even and just watch how market will act around this area. If market will fail here, well, we'll lose nothing. Possibly even we can exit early and make some pips on the market. If market will break it to the upside, we will win a lot. Just keep in mind this area and track that market should be above the weekly pivot point. So some retracement, flirting, possible some piercing of this area, but then some thrust, hourly trend should turn to becomes bull, turns to the upside, and then we can enter the market with and possess ourselves to a possible breakout of this area and move to the 130.50. So if you will not be hasty enough to enter the market on the hourly chart, or if you are a positional trader, wait until the first thrust will end and then enter on the nearest retracement. I suspect that this could be the retracement to the 128.20 area with the target around 130.50. Well, if market will not intend to move higher at all, then I suspect that market should break this weekly pivot point in the beginning of the week to the downside. Then we can see some movement to the previous support area around 26. Well, that's been said, this is our trading plan for the next week and for Monday. I think that you will do everything right, and I hope that you can take some profit from the market.